Welcome all to the Node, your place for news, interviews, and education. I am Mike, aka Veteran Crypto, and today we are going to be doing a deep dive in the second half of the show on both Render and Keeta. So Keeta is a project that on this channel, back when we were DeFi Crypto and Airdrops with just me and Jeff, we've done a couple of deep dives on it, and our community has actually made quite a bit of yield off of some DeFi plays that we did a while back. I personally have a decent, full disclosure, I have a decent sized bag of Keeta. I don't have any render, but it is a very interesting project. I know from just looking at it, in the past when it first launched, and it's a DePIN project, decentralized physical infrastructure. So basically compute. We all know that one of the major hurdles right now in tech is there being enough compute power for AI, and that's why they need all these data centers. And you're always seeing that in the news where they're trying to rapidly build these data centers for all these new AI models as they scale. They're not able to keep up. So decentralized physical infrastructure becomes critically important to as a stopgap measure while they try to build these data centers. So render is a very interesting, and DePIN in general is a very interesting use case. Keeta, on the other hand, is more of a finance chain that deals more with speed, scalability, and it is built on the base network. So we're going to be getting into that here soon. How's it going, David? How's your morning going?
Doing good, Mike. I got a lot done today, man. Got so I can just tell you about it real quick.
Yeah, go ahead.
So yeah, the store. So all of the store products are all ready to rock and roll, and that stuff is live right now. Looks pretty darn good. I'm shipping the updates to the community right now because a lot of people have been joining that Discord, and I really want to make sure that when people join the premium live calls on Mondays, Wednesdays, and Fridays, that's all in line. Like our P's and Q's are up to snuff. Like everything, I's are dotted, T's are crossed, stuff like that. So the community is shipping as we speak. The store shipped earlier this morning. The coaching, I'm going to be making some updates to that page. And then I'm going to take, the learn page, update the Bitcoin course there, and then all of that together I'm going to use to update the homepage. And man, then I got to build out that library.
Well, and then you got the music that you said that you were launching after the show today.
It is. So it's launching immediately after the show at 2 p.m. That's going to be pretty cool because I'm going to be listening to the music that I made, as I work in the afternoon. It's going to be awesome.
I'm actually going to start doing it too, just because, I mean, the couple of samples that you sent me, I really enjoy listening, something in the background while I'm working. A lot of times I'll, listen to, crypto podcasts and things like that, but it'll be nice to be able to, listen to our own channel. So basically whenever we're not, live, doing a show, we'll just have, music, going live. So
yeah, it's going to be awesome, man.
No, definitely. And I want to point out on our Discord, if you join our Discord, there is for the premium channel, because David does 3 live calls a week, and I'll show you where you can find the schedule for that. But you can actually do, I think it's a 7-day free trial.
Yes, you can.
Yeah, It's a 7-day free trial. So if you want to check out what those live calls are about, if you're looking for mentorship, in DeFi and in crypto, and finding somebody that that you can learn from, and help you navigate crypto and DeFi and wallets, and all those mistakes that a lot of us made when we first got in, because there wasn't these resources. That's why myself and Jeff started DeFi Crypto and Airdrops years ago, and why we aligned so heavily with David and DeFi University, and ended up starting this business together and rebranding, is because we all share that ethos that we want to make sure that our community and anybody out there gets no cost access, can't use the F word, no cost access to education. on just the basics of how to navigate, wallets and, DeFi protocols and crypto without getting scammed, understanding tokenomics and its relationship to the price of the token and the underlying technology or company and its revenue that it generates and fees that it generates. These very basic fundamentals of trying to invest in this new technology. We don't charge for almost anything. I mean, we have a couple of things that we charge for like more advanced things, because we're a business. For a couple of years now, I know that me and Jeff have been paying out of pocket, and now David has joined the clan of paying out of pocket to run this. We're cash flow negative, as David would call it. But with the help of the community, we're starting to flip the script on that. So thank you to all of you out there that tune in every day and watch, and are helping us grow this channel. I can't thank you enough. And even if you don't buy anything, if you find this valuable, please like, follow, share the stream. It helps immensely. So with that, let's go ahead and I'm going to briefly jump through all the different socials so that everybody knows where to find us. So if you want to join the conversation with the rest of the community, go ahead and pop on over to YouTube, and you can find us at the Node Network, all one word. And I changed the name. It was the Node channel. For some reason, YouTube will not let me put the Node Network. So I put the Node Net. So it is what it is. But this is where you can find all of our different channels, because we are truly a network. So I'm just going to quickly go through what the different channels are, because I'll get into the schedule here in a minute. But you have the main show, the Node, Monday through Friday, 9 a.m. to 11 a.m. That's Pacific time. Crypto and Chill, Tuesdays and Fridays. So that's tonight at 5 p.m. Pacific. That's where myself and Jeff, just talk about, crypto in general and life, since the last episode. So whatever's happened between Tuesday and Friday, Friday and Tuesday. The Blockchain Report, Monday, Wednesday, and Thursday at 11 a.m. Immediately after this show, it's where Jeff does deep dives into very, very early projects, some of which you probably never heard of. Jeff, for years now, has turned me on to a lot of really interesting new projects. Keeta was one of them. Plume was one of them. Plume is very down, but I've made a lot of money off of it that I invested in other projects when it first came out, because our community we got it in early and made a bunch of yield and peeled off that yield and put it into other projects. Sovereign Soil. This is where on Saturdays I talk about emergency prep, homesteading, and my experience. I did 22 years in the military. So I just share my experience with emergency prep that I've been doing for over 20 years, and homesteading that I've been doing for over 10 years, since I retired from the military and moved up in the middle of nowhere. The market wrap. So David, at the close of the markets, so 4 p.m. Eastern, does about 20 to 30 minutes of technical analysis and just goes over what the markets did that day, and not just in crypto, in commodities and stocks, in everything. So if you're interested in having him take a look at a chart that you might be interested in investing in, that's the time to do it. Jump in the chat, and by all means, ask him to take a look at that. I'm sure he'd be happy to. And on Tuesdays and Thursdays, he's been helping a member of our community, going through and teaching her about, or taking her through his coaching program. So taking her from where she was currently at up to where she can become more proficient in navigating protocols and these different chains and the bridges, the different wallets, all these different things that most people struggle with trying to figure out on their own. So great resource if you want to check that.
And so, Mike, today what we're going to go through is Hyperliquid. We're going to take a look at Hyperliquid today.
What's that? Oh, you're going to take a look at Hyperliquid during the coaching session?
That's right. Yeah, we're going to put on a position over on Hyperliquid.
I'm still waiting for the Hyperliquid pullback that seems like it's never going to come so I can buy some, but
I know, right?
I
6230.
keep sitting on my hands with my dry powder, and it just keeps going up. So fuck you, fucking and your success. All right, and then we got Saturday Night Fever. Saturday Night Fever is Jeff, like, Sovereign Soil is kind of my passion. Saturday Night Fever is Jeff's. That's where he does. He's a DJ in the San Francisco Bay Area. He has done a bunch of interviews with local DJs, and sometimes they do tutorials, and sometimes they just spin music. So if you're into that genre of music, great channel to tune into. The Red Pill, another one I'm very passionate about. This is where we try to keep a lot of our passion when it comes to politics and the world in general, and just different things, religion, um, kind of traditional relationships, politics. We've talked about ancient civilizations, you name it. We talk about it on the Red Pill. If it's controversial or it's a hot topic, we usually just have drinks and muddle our way through it. And then occasionally on Wednesday and Sunday, Ellie and Jay, two members of our community, jump on and they'll game. Usually it's ARC Raiders, but sometimes we'll do other games. And then sometimes I'll just jump on with a random game. I actually yesterday downloaded Sniper Elite. And so it looked like a really cool game. So I'm going to jump on that, maybe later today. Maybe I'll stream that. But kind of interested to check that out. And I just noticed that the Node 24/7 music is already live. So,
And you know what I see here? Like, just at a glance, the face of that AI generated avatar there,
yeah,
it
yeah.
looks like a tranny, man. Like, what the fuck? Like last night, like, it didn't look like that, okay? Like, but zoomed out like this, I don't know. Not quite exactly what I was going for, but hey, that's the first iteration. So
what? It is what it is. It's
I'm gonna be posting these every day. So I've got the workflow down, man, and the next
nice.
one's gonna be more, along the lines of, sitting at a computer or trading or working type deal. So
Yeah, it looks like Crispy, sold. I remember a couple days ago he was talking about how he sold his hype and was waiting for
oh
a
yeah.
pullback to buy back in. And he said that he's kind of where I'm at now. He's sitting with some dry powder, wanting to get in on hype, but refusing to buy the pump. So
Yeah, no, it's difficult to buy a big green candle like that.
it is. I don't want to buy big green dildos. I just don't.
Nah, you don't, because they tend to reverse.
They tend to reverse, and you end up getting pegged by that big green dildo.
Yeah,
And
you
I'm
don't
not
want that.
I'm not down.
Nope, especially not in the Bitcoin bear market. I mean,
No,
nah.
no. I still think that we're in a bear market. There are some things that are pumping, but I personally I still see more downside overall for the market, and I'll patiently wait. I have exposure to some great projects. I'll just sit on my hands. If I don't catch it, I don't catch it.
Yeah, well, stocks don't seem to care. They are up only, it seems. Oh,
No, I definitely do not want to get pegged by the Hulk. So, all right. So if you want to follow us on X, it is at the node underscore network. Had to add an underscore in there. And if you want to check out our official website, this is the node.pro. This is where you can find all of our no cost education, all of our no cost, our no cost community. There is a bunch of stuff, even the newsletter that that we're still trying to tweak to get perfect. You can generate at no cost a preview of the newsletter. So it goes through, it does all it generates all the data, and then pulls it up, and it gives you the outflows or inflows for the major ETFs. Gives you all of the prices and the movement and
so
hyperlinks.
if you could pause there for a second, Mike, because you and I haven't been able to go through and test this newsletter live like that, but I think what's going on is I think that your computer is cached, like it's pulling cached data. Um,
It could
because
be.
yeah, because when if you can refresh the page, oh no, it's not pulling cache data. It just did that for me. I was pulling cache data. Okay, yeah, got it. Yeah,
All right.
this newsletter, man, been a real pain to get this thing like actually working
It's
well.
a lot of data points. In your defense, I mean, it's not from a lack of trying, but I mean, you got constantly moving targets on price, on the 24-hour change, where it's sourcing the information from. Then you got down further, you have all these different. It's looking and constantly scrubbing for all those different social media posts, for these different assets because you choose the assets. This isn't something where we just choose the assets. You go through and you select the stocks, the commodities, and the crypto projects that are in your portfolio. And it goes out and finds the prices and the news and the ranges and everything for the ones that you selected. So it's not like this cookie cutter that we put together each morning and in post. This is actually generating off of the ones you select once you hit the button. So
And I gotta say, now that I'm done with the store, and I'm also done with the music. So now that I've got the music workflow done, starting to publish there, I've got the store done, and that's published. Now I can just finish this newsletter. And I mean, I thought that I had it done the other day, and then it broke again.
you know what?
Uh,
We offer it. You can generate it once or twice a day at no charge. Right now while we're still getting it dialed in. So come and check it out. I mean, make sure that you use the links and you verify the data, but come check it out because I mean, this will do what will take you an hour or more. Going to all the different social media and trying to find all the different news articles and figuring out what websites and using AI and going to Coin Market Cap and doing all these different things, you can see, I mean, this pulls up all this different data on, the on-chain flows, on the ranges, kind of what the on-chain data or analytics is telling us about, how these markets are moving. Right here, you're seeing the ETF spot flows. What else we got? Got derivatives, the different catalysts. The big story is crypto sell-off deepens as institutional ETF outflows hit billion-dollar milestone. So, this will tell you exactly what happened and why it matters. The counter argument. There's a lot of even though we're still dialing this in, there's still a lot of valuable data here. And again, we don't charge for it. Use it. So, and then of course all the different news articles with links, if you want to, go deeper on on all the different news articles. So it's yeah, I can't stress it enough. There's so much value here that we do not charge for. The DeFi University. If you're a beginner, what's going on? There we go. You can click on it and you can start. Again, the four-letter F word. You can just click on these. It will take you in. It will tell you, that it's structured with quizzes, checks on learning. So you can go through understanding and trading DNA, the 4 pillars of trading discipline, managing fear and greed, building your foundation habits. So a lot of this
Mike,
is
if you click on one of those, everyone, if you just want to be able to see that, every single one of these lessons has a podcast you can listen to, a video overview. There's nice pictures if you don't like reading. So,
no,
stuff like this.
this is most other places out there charge hundreds, if not thousands or tens of thousands of dollars for their programs that are not even as good as this. So we give this away. That is our ethos here. Is we want to make sure that you are all educated. We are not influencers. We are educators. And we learn along with you. There's people in our chat. Keith has been a great resource. He's new to the channel. He's been around for a couple weeks now, but Crispy, Jay-Z, not Scoop Boy is Scotty D in our Discord, one of the moderators. It's they bring as much alpha. Our community brings as much alpha as we do. And oftentimes, if we're giving out information, sometimes they'll correct us. And we welcome that here. We are all here to learn. We're not trying to influence you into buying a certain project or crypto. We don't shill here. We are trying to educate you so you can take that education, do your own research on top of that, and then with a full knowledge of the tokenomics and the fundamentals and what these projects are doing and the use cases, you then invest or don't. It's up to you. I don't care. It affects me in no way whatsoever. We just want to educate you. So, the coaching, we talked about the coaching. If you want to schedule a no cost consultation with David, go ahead and book the discovery call. There's no obligation, there's no cost. He'll sit down with you, go over where you're at in your journey, where you're at with your portfolio. He may say you're not ready to, for this paid service. He might say, I want you to go into DeFi University and I want you to focus on these modules. And once you do those, come back and let's talk again. That's the way we operate here.
I do that sometimes. It just depends on what someone's looking to achieve.
Exactly. We want to make sure that you get the most out of what we offer. The community. You can subscribe to this school. That is $99 a month. And that is the 3 live calls that David does with the veterans of his community, where they share different DeFi strategies that each of them have found. They prepare lessons for each other. It's a great environment to for mentorship if you're trying to get to the next level. And then the same calls are done on our premium. So our Discord is no cost as well. But there is one channel in the Discord that you can pay and be on these calls. You'll get the link to be on these calls. Same with YouTube. There is that 7-day no cost trial if you want to try it out. We love being able, and that's why he's doing the live coaching with Ellie. We want to show you. We will pull back the curtain and show you what you get in our paid services. We have nothing to hide. We want to make sure that you find value. We're not going to hide it behind a paywall and say, pay if you want to see. We are going to show you what you're going to get because we want to make sure you're happy.
Yeah, and so the way that these calls work is you can, and this is actually what I'm going to be updating, today, in addition to that newsletter. But right here, the community section. So the way that this works is the calls are private Google Meets calls on Mondays, Wednesdays, and Fridays. So 3 times a week, an hour each. And you get, basically an open office hours forum where I run through the research of the day and then present actionable opportunities. So if that's something that interests you and you want to build a crypto and DeFi skill set and you want to be able to do it, at a group level, then join the paid calls. It's really valuable for a lot of people who don't want to do like private one-on-one coaching, but at the same time they do want to be able to build a skill set and maybe be able to up their game. So yeah, this is what Mike's showing here, that schedule.
Yeah, so this is all of our different shows. All of our live shows. Those 3 paid calls that David does. So you have Monday through Friday, our 2-hour morning show, with me and David. You got the blockchain report on Mondays, Wednesdays, and Thursdays. Immediately after this show, you have David's daily market wrap Monday through Friday. At the close, Eastern time, 4 p.m. You have Crypto and Chill. So the red is our evening shows, and then you have the purple, which is the paid live calls that with David in the community. And you know what? I keep saying it. Starting today, I'm going to be on that freaking call. All right, I'm going to do it.
It starts tomorrow.
But starting today, I'm going to commit to being on them, and I put it up so I get an alert so I can jump on those.
Perfect.
So there is that, and then last but not least, we have the store. So I
Look
gotta.
at this.
So what happened to the design that I did with did it not want to like display or?
Which design did you do, Mike? There were
So
like
it
700
was
of them.
that cyberpunk digital hand that was holding that neon red pill.
So I can do that, but so the way that like the PNGs didn't come out looking good. Um, the ones that I have in the Slack from like the background of the Red Pill show, I know exactly what you're talking about. It's that hand, and the problem is those PNGs, like it either comes out as a perfect square or a perfect circle, but it doesn't actually like remove the background, so it looks funky on garments like that, if you know what I mean. um
Yeah, so
but
it's
you
like
see
it's this
what I'm
one.
saying? Yeah, it ends up being either a perfect circle or a perfect square, and it just,
It
like I
didn't
like
look
it looks funky on garments, but I like the image. You see, here's what I wanted to be able to do. um, like in between the fingers there, I
yeah,
would remove the red pill, the text. I would remove
yeah.
that text, and then in between the fingers, we need to be able to cut out that black space, and then it
Oh,
needs to be
gotcha.
transparent. If we can do that, then I can throw it on garments.
You know what? Maybe I'll ask in the Discord if we got some people that are, really knowledgeable about, messing with images and stuff. Because I have very limited experience with it just from doing the
Well,
thumbnails for the shows.
yeah, I can do it. I just don't want to pay for Photoshop. Like I really don't like Adobe.
That that,
So
that that's what I mean. It's maybe somebody in the community could help us out with it.
So Keith is saying have AI edit it. And,
That's what I've tried.
look, the AI tools are good,
Yeah.
but they're not quite really like perfect. You're gonna have to spend some time manually editing some of this stuff. So, but if you bring it back to the store though, Mike,
Yeah. Hold
there's
on. I'm just.
there's
Yeah.
there's some cool stuff up there. Like I'm gonna be buying some hats, some shirts, just for me. Like I want to wear this stuff. I want to be able to rock the node, man.
The hat that I want is this one right here. This one on the far right. I
So
I, I,
if so,
I
there's a
love
lot.
I love that stitching, and I love how it's set off to the side.
So this is the here. Let me do something, Mike. Let me just take over the screen share for a second here. I want to.
I But you know what? I almost want this on the other side because then it would like because where I like having the camera, it would show that side.
Well, so there's a lot more than just that one now. So if you here, let me just walk everyone through this stuff because I'm pretty excited about this. So this is our updated store, right? We've got these four different sections. You got dev and core. So if I click on dev and core, now all of a sudden you can sort by the show. So or you can just run through all of the merch here. So crypto and chill. I really like the way that logo for the crypto and chill came out there. I've got the other one right here. I kind of like this. It looks like frozen almost. That's kind of cool. The shirts I think look pretty good. That crypto and chill shirt. Oh, looks like it's giving me an error. I got to go through. I just launched this morning. DeFi University hats, shirts,
Oh,
long sleeve shirt.
all right. Sorry to cut you off. We've already burned through 30 minutes, and I got some news that we need to get to.
I like the merch though.
No,
Stuff
no,
looks
I
great.
definitely do. We got a little long winded on shilling our no cost stuff and our everything that
Well,
we're
I mean,
building.
I just finished building it today, so and it
It's
doesn't
just
even all work yet.
we get we get all excited about it. We need to get into the news.
Let's
All right,
do it.
so let's see. Let's start with DeFi and infrastructure trends. So the real world asset value tops 29 billion. A data-heavy research update released by MetaMask highlights that the tokenization of real-world assets is experiencing its strongest growth curve yet in 2026, serving as the primary bridge between traditional finance and TradFi and DeFi rails. The metrics: on-chain tokenized US Treasuries have climbed to a staggering 12.88 billion. This surge pushes the cumulative distributed value of the broader RWA market past 29 billion. I would dare say it's even more than that because Canton Network, with the tokenized repo market, is like 300 to 400 billion. So I would say that this data is way off.
Right. So the tokenized repo market is a lot bigger than that.
Yeah,
I think it's like maybe even multiple trillions of dollars a day. I'm
yeah,
pretty sure that that's like, one of the largest markets on the planet. And
yeah.
Canton basically has a monopoly on that right now.
As of right now, yes.
Mhm. So basically, Canton needs to get to that burn mint equilibrium. If they're able to do that, then I think the token could do really, really well. But as far as like total RWAs, yeah, it's I think it's like a 260% year-on-year growth from early 2025 to 2026.
Hmm.
Um, and depending on what you're looking at, I think it's probably going to 10x over the next 24 months. Everything is going to come onto one chain or other.
Well, I mean, even without legislation, look at the growth. I mean, this is speculative growth.
Right.
This is institutions, governments, and organizations tokenizing a bunch of stuff, and they don't even know the rules yet. So imagine once that legislation, the rules, the guardrails are put into place. Imagine what's going to get launched. What's actually going to go on chain. I think this is just a drop in the bucket. This is basically a test to see if the rails are going to work. If this system, this new finance system, this upgraded finance system is going to work. That's what I think this is.
Yeah, and most of it is treasuries. Most of it is U.S. treasuries. That's the majority of it anyway. And then you've got a bunch of commodities, stuff like this. What I'm curious about is when we have the market wrap and the coaching with Ellie later on today at 4:15 p.m. Eastern. We're going to be taking a look at Hyperliquid. And the thing that I'm interested, to take a look at with Hyperliquid today is, can I put up U.S. Treasuries as collateral and then trade tokenized stocks against them? Because usually the relationship between those is inverse. If you see, stocks up, you might see, treasuries moving sideways. I mean, that relationship hasn't necessarily been like that recently, but historically, it does tend to be that you'll see stocks up and bonds down. Um, so I'm kind of sort of curious to see if I can put up like tokenized treasuries as collateral and trade against that. That would be really, really cool. But
Well,
if
that
not,
well, and that's one of the things that why I'm so bullish on tokenized real world assets is because it opens so many opportunities when it comes to DeFi. That traditional finance is just not available. When you have tokenized real estate, when you have tokenized stocks and bonds and the repo market, and, just all these different tokenized gold. That's one of the ones that I was wanting to do today. Um, but there's a project out there, and maybe we'll do it tomorrow.
what's it called?
Uh,
Alchemy?
yeah, there's
Yeah.
it's I believe Alchemy Pay is the one they bought a platform that is tokenized gold, but it's yield bearing, so you can actually earn with it, and then you can actually take out loans against it, and potentially because it's tokenized, use it in DeFi play. So you can have full exposure to. I mean, and look what gold has done. I've been investing in gold and silver for decades now, since I was a teenager. Um, like some of my first jobs, I hung drywall and mowed lawns and stuff back when I was a kid. And most of the money that I earned, I bought Morgan silver dollars and, at times when I could afford it, bits of gold. But that was back when gold was like $300 an ounce, 300 something dollars an ounce, and silver was $5. Now gold is like hovering around $5,000, and at one point silver was like 120. Recently. So I've made more money in precious metals than I have in crypto. So I don't, like this whole battle between, crypto, or precious metals. I'm like crypto and precious metals. I'm all about diversifying. I have real estate, I have gold and silver. Hell, I have ammo. That my ammo that I bought, David knows I refuse to shoot my ammo because I bought most of it back when ammo was like, like a tenth of the cost that it is now. I mean, shit, you go and get a box of ammo now. It's like, for 20 rounds, you're talking almost a buck a round. I mean, it's ridiculous depending on what caliber you get. So there's a lot of opportunities out here, out there. And I mean, where I live out in the country, I can pay people with ammo. I mean, if I want somebody to come over with their front end loader or a backhoe or something and dig a hole, I can pay them with ammo. They'll take it like it's money. Because they'll use it for hunting season, they'll use it for target practice. They'll use it to pay somebody else. It's currency out where I'm at.
So, if we're talking about being able to trade RWAs and stuff like that, you can trade the SpaceX IPO now on Hyperliquid.
Yeah.
You can trade the OpenAI, product, whatever that IPO is going to be. Now, Paul Tudor Jones did say that in hindsight, the top in 1999, 2000 was easy to see because all the IPOs. So it's like 90 days after the IPOs, there are big unlocks and people can sell all their stock. So he's saying that, maybe with the stock market going vertical, that the SpaceX, OpenAI, Anthropic IPOs, which look like, the SpaceX one looks like it's going to be pretty soon. So, maybe that could be a topping signal for, at least the immediate term. But at the same time, though, Mike, like there is a part of me that wants to think out 5 years, right? And if you think
gotta have a long-term mindset when it comes to investing, unless you're doing day trading or scalp trading, you have to treat it like a marathon, not a sprint. Because if you're treating, investing in these assets as a sprint, you're going to get wrecked, because you're going to be jumping, from pump to pump to pump, and you're just going to get bled off. It's death by 1,000 cuts.
So, even though the NASDAQ and the S&P, are extremely concentrated in a handful of stocks right now, those are the best companies on the planet. And when SpaceX goes public, eventually Tesla is going to be wrapped into that. So it's going to be like one, entity that's going to control Tesla, SpaceX, and all the rest of the Elon Musk companies. So
Well,
I'm just thinking to myself, like, dude, we could just be at the very beginning of like the next like real bull market. So,
well, I'll tell you, freaking, Elon Musk is poised to be the first ever trillionaire, just because of the stock options that he is, that he has for, the SpaceX, IPO. Most of the deals that he does with the board, and the dude is smart, and he's bullish on himself because most of his pay, because he's freaking insanely smart, he doesn't take cash payments. Most of the way he's paid is in stocks and stock options because he doesn't have to pay taxes on it. It's unrealized gains.
yeah, until some politician in California decides that they want to run a 5% wealth tax, and then the Biden regime in their 2025 tax plan, they were pushing a wealth tax. So the moment that these Democrat politicians get back in power, it's like, yeah, but I mean, if they run that shit nationally, where there's a federal wealth tax, like that is just like such a ridiculous, horrible idea.
Dude,
Um,
I would
yeah,
not be surprised if Elon bought a country or bought an island and just moved everything to it. If I was him, that's what I would do.
I mean, it's not a bad idea. Maybe he could buy South Africa and fix that country.
Dude, it's there's I think there's plenty of places out there that he could probably, you know, buy a small country, and I'll bet you the country would be freaking way many countries would be way better off, with him owning it, because I mean
Well,
he would between freaking uh, with the power and solar, SpaceX, all these different things, he's going to make sure that that country's happy and stable, because he his livelihood depends on it.
and think about how ridiculous the entire premise of a wealth tax on unrealized gains is. Like if you own, and it's everything. Okay, like the California wealth tax that Biden was trying to push in, if he had won in 2025 and in his tax plan, just you got to think about how horrible of an idea this is. So number one, if you don't sell something and you don't realize gains, then okay, so like you don't have a taxable event. But let's say that the wealth tax passes in California. You're going to have what? A politician or a tax assessor like valuing everything in that you own, literally everything.
Oh,
And
dude,
like
they've
how
they've,
does
they've, they've talked about doing a wealth tax, like if you own your home, they're talking about making not just property tax. They've talked about making you pay for unrealized gains. They talked about it with crypto. Whatever you have in your portfolio, they wanted to charge you taxes even if you didn't cash anything out. Just if
and
you have
so
a
think
million
about
dollars
this.
in crypto in a portfolio, there's like, oh, then you have access to $1 million. So we're going to charge you 10% or whatever.
So Mike, let's say that, and they always started off like the income tax started off. I'm still waiting for World War One to end so the temporary income tax can go away,
Well,
right?
that's what I think is hilarious. Is
Because that's the way it started in
well, most of the
1912.
people out there don't understand that. They talk about the rich paying their fair share. It's
What?
like,
What? What?
do you
They pay
do
all
you
the taxes.
do
They
you
pay
not
all of it.
do you not understand the way the government works? Look at it, learn history, please, because like David just said, the income tax started out in World War I as like I think it was like a 3%
It
tax
was it
on,
was a temporary like 1 or 2%
yeah,
tax on
and
like
it was
the
and don't worry
wealthiest
about it. It's
people.
just for the wealthy, and
Right. It's temporary. It's
and then
temporary. Don't you
then
worry.
very quietly, all of a sudden, it was for everybody,
Right.
and
And
and then
that was in the 40s. After World War II, all of a sudden, it was rolled out to everyone, and then the withholding, that's how they were able to just steal from your paycheck.
yeah, it's
And
like you don't even get the opportunity to get it and then give it to them, because it's an invisible way that they make more money, because if they take more than you owe that whole year, they're earning interest on it, and then
but
at the
think so Mike, think about how horrible an asset tax is. Like let's say that you got a piece of artwork in your house, right? And that
yeah
piece of artwork, what is it worth? Maybe it's worth $250,000. It's an amazing piece of artwork. How much can you sell it for? Can you sell it for 250? Is it going to take you 5 years to sell it for that? Will you be able to get half that amount, 1/10 that amount? How much can you actually sell it for?
oh
So if
shit
you're going to get taxed on, whatever some assessor says your property is worth, dude, you're going to have to sell all your shit just to be able to pay the tax. Like
yeah
it's insane. And the people who can leave will leave. So
oh
it's a
they've
great
already
way to ruin the
they
tax
have the
base.
resources to do it.
Yeah.
So the next news article is Venture Studio Improbable deployed a 2 million investment into Automato, Otomato, a portfolio aware intelligence layer for DeFi. I've never heard of this. The tech Automato runs continuous 24/7 on-chain monitoring of specific user positions across multiple chains. It uses an AI-driven notification model to alert participants when real-time smart contract changes materially impact their risk profiles.
Huh.
Uh, transaction costs, or yield opportunities. Dude,
That's pretty
look that
cool.
look that up. Let's spend the rest of the time diving into this. We got 15 minutes.
Yeah, so I'm reading about it right now.
Share your
So
screen.
Well, so the idea
Oh,
that, I'm just reading about it on
oh,
Gemini. So the idea that you've got this portfolio aware assistant with zero setup, that's Automato. What a name,
okay.
Automato. So, the idea that you can have a portfolio aware assistant that is not just going to track your, LPs and, lending pools, NFTs, prediction market positions, perps, whatever. But it's also going to be able to tell you if there's, some material change to the smart contracts. That's really, really cool. I think that would have been very useful for a lot of people prior to that layer zero exploit, right? That would have been pretty useful for a lot of those people. But yeah, I mean, is this something that's live right now? It looks like it is.
Let
So
me
I've got
let me
it. I've got
pull.
it pulled up. Here's O Tomato. So this is yeah.
Oh,
So I got it. I got it pulled up on the screen share. O Tomato. So what exactly is this? Try it on Telegram or get the app. And let's take a look at some of these features. Okay, so it looks like a portfolio tracker, right? It's going to
yeah,
watch your on chain positions and tell you when something meaningful changes. Okay, so
dude.
yeah,
It,
health factor.
it's hyper EVM, hyper EVM wrapped campaign, and the ecosystem drew 4,000 unique users in 5 days. Converted 81% of them into Telegram bot users and shared. Okay, sorry. Go ahead. Go ahead.
Wow. No, no, no. Keep telling me about the conversion stats. That's pretty interesting.
Okay. It says it was shared 971 times on X, all with zero paid promotion. So that speaks volumes. That that it's being adopted. The conversion rate of 81.6%. That is huge. Anyone that's ever tried to onboard people, having that high of a conversion rate is massive. And then the fact that it was shared, that people liked the experience and the product enough with no paid promotion, went out and promoted it. That speaks volumes. I might reach out to these guys and see if they want to come on the show.
100%. I'd love an opportunity to talk to these guys. So it says try O Tomato. It looks like it's a mobile app or Telegram. Cool. Okay, so alerts that actually help. Yeah. Doesn't this kind of sort of remind you of what Colin built? Like a little bit with the alerts, anyway?
Honestly, I didn't really understand what he was talking, what, like, kind of what he was showing when he was showing it.
He,
But
he he basically built a tool that like allowed you to set custom alerts.
hmm,
Um, kind of sort of like this, but this is an interesting one. So
well,
yeah.
I got an about Automato section here in the article. It's it watches okay, it watches what users actually hold. It interprets risks and opportunities in real time and sends only the alerts that truly matter via the mobile app and Telegram. Users drop in a wallet address and stay ahead of the market all in under 30 seconds. No setup, no dashboard staring or doom scrolling. Automato is founded by Clement, I can't pronounce his last name, and Dylan, and backed by Improbable. So they are a UK-based venture builder that creates and backs companies built on emerging technologies. It aims to solve the hardest technical challenges and embraces the risks associated with doing so. Over more than a decade, the company has developed and deployed high performance technologies across sectors including gaming, virtual worlds, and defense, and has built and exited multiple ventures. Today, Improbable focuses on building the intersection of AI and Web3 through a venture builder model that combines capital with hands on operational support, shared technical infrastructure, and experienced leadership. Rather than operating as a passive fund, Improbable works alongside founders to help them build, launch, and scale ambitious companies while ensuring that intellectual property and long-term control remain with the ventures themselves. That's cool. I like that.
Yeah, I agree. I think that this is an interesting tool. I wanted to see what they had to say about impermanent loss because this is something that I would say most people don't understand, especially when it comes to concentrated liquidity, but just
Yeah.
in general. People don't understand, this risk. Impermanent loss is your gamma. When you provide full range or concentrated liquidity, you are short gamma. That's your cost of volatility. That's your gamma. You get compensated for taking that risk by earning fees. In V2, your fees are usually much lesser, but if you concentrate your liquidity in V3 or V4, then you're going to earn much, much more in fees. But by concentrating your liquidity, you also magnify your gamma risk, your volatility risk. For
Mhm.
the vast majority of LPs, the gamma is going to be greater than your theta. Your theta is your fees. So most LPs it's just structurally unprofitable. Like the moment that you enter, you're likely over time to not make money. And there's a lot of other, crypto and DeFi channels out there that push content showing returns of, like 10% per month using LPs. That's not real. Okay. So what
Well,
everyone needs to, it's not, it's
it's
just not.
well, you get that in fees, but then you take into account what you lose, from the other, from gamma and from everything else, and net, it's a loss.
Right. So, what I see many other channels doing is they'll put together some custom tool. And this custom tool will show the position and it will show the fees that you earn,
Yeah,
but it won't show your gamma. It won't show
exactly.
your IL
So
and it
so
won't show your
they're only showing
performance.
part of the picture and saying, look at all the profit that you can make without showing the whole picture. And again, when you look at the whole picture, it's a loss.
Right. Exactly right. And so, but they know this. These other channels know this.
Well,
They
but
know.
that doesn't get clicks. That doesn't get engagement.
I know people want to think that 10% per month, providing liquidity in an LP is real. It's not real. You're
No.
not doing, look, if 10% per month providing concentrated liquidity in a wide range CLP was real, then every investment bank and their mom would be, throwing every penny that they had into those products. It's not real. Your risk is that you lose much more in value on the LP. And this is irregardless of whether number go up or number go down. Like if price goes down, then you're likely to lose significantly more. But there is impermanent loss on the upside too.
Well,
So
here's
I'm
a great question,
curious.
Crispy. So, because this is something that that I've even said in the past. Is LPing more effective in consolidation or sideways periods?
That's the only time that it works. So
Yep.
if markets are moving sideways, providing liquidity works. But the moment that there's a big move up or down, you can get stuck, eating a
Well,
bunch of IL.
and especially if the assets in the pool aren't correlated. The less that the assets, so the more that they move independently opposite each other, the more
That
divergence
that's
loss.
that's what creates exactly.
Yes.
That's what creates the divergence, and
Yeah.
it doesn't matter if the asset diverged to the upside or the downside. It just matters that it did diverge from your entry, and by a greater amount than what you earned in fees. So, yeah, I mean, if you're not going to make money compared to holding, then what are you doing? You know, like it's you're chasing some imaginary yield. Now, it does work. Providing liquidity does work if markets are moving sideways. It works then, and it works when volumes are super high.
Oh yeah, no. Yeah, when volumes are super high, especially if you can front run it, like if you know that a project, like say that you see that Ondo is pumping, or you see that Hyperliquid is pumping, and a lot of people are trying to swap into it, and you can get some liquidity in there, then all those people swapping are going to be paying you fees. So
That's
during that,
dangerous. That's super dangerous though,
it's
because
super
if it
dangerous.
If it
But
pumps, like here's the problem. If it pumps, you've got divergence on the way up. And so usually the volumes are not going to be great enough to give
but
you like, that 3 or 5% per day yield that you need just to break even.
but if
So
you're not using your entire bag of that asset and you're focused more on just making, you might not make as much money if you held, but no matter if it's going up or down,
the
like the price,
math, the maths don't math, Mike.
but they do it, because if there's high volumes, it doesn't matter if it's moving to the upside or the downside. If there's high volumes and you're earning fees, then then you're not using your whole bag of that asset. Then you if as long as the volumes stay high, you potentially can the fees are going to out earn the divergent depending on the assets. There's a lot
They
of
don't.
variables, but
They
I've done
usually don't.
I've done it before. I did it with Plume. I was earning so many fees that it did not matter what the asset was doing, and I made thousands of dollars, off of $1,000, and put into other assets, and Plume has definitely taken a dive since then. But like I said, I peeled off that yield and put it in other assets that I've like Aerodrome and other stuff that I've done really well for me.
So
But
let me just caveat that there. So, when the volumes are super high,
mhm,
okay, they've got to be super, super high. Like, and what does
yes,
super high mean? Well, it means you've got to be doing more than like 1 or 2% per day, like in
yeah,
fees. That's what I mean.
absolutely.
So
No,
if the
on Plume at one point, I was making like 2 or 3%.
Well, right, but you have to be earning that type of yield to
Yeah,
justify taking on that gamma risk, that
absolutely,
impermanent loss risk, because the
absolutely.
token is moving every day by so much that if you're not earning the 2 or 3% per day, there's no way that you can even break even. And
Yeah,
so the vast majority of concentrated liquidity pools are just structurally unprofitable. The vast
absolutely.
majority.
No,
Yeah.
no, everything you're saying is true, but I want to be, kind of the other side of the spectrum. That yes, you can make money in LPs, but you need to understand how they work and understand, the gamma. You need to understand, what impermanent loss is at its core. You need to understand all the different variables so that net you're not just looking at the yield. You're not just looking at oh, I'm going to make 3,000% APY, and it's like, yeah, it might be that right now. Wait 5 minutes. it,
So
might be
that,
20.
that's a good point that you just brought up, the 3,000% APY stuff. So whenever you see yields like that, high yields like that mean crazy
Red,
high risk.
yeah,
That's a super super high risk deal. You
yeah,
got to understand what that risk is. If you don't understand where the yield comes from, you might mess up and become the yield yourself.
that's
So
exactly and dude, that's one of the reasons why I'm so bullish on those aerodrome locks. Is I'm basically hodling Arrow because I'm
I want to
because
throw up, dude.
because I'm bullish on it. And honestly, it's treated me. Arrow has probably treated me the best out of all my assets. But yeah,
Yeah.
but I have full exposure to the asset, and I've steadily been earning 20% on my Arrow locks for years now.
Yeah, but it's locked. It's locked. And, 20% on something that, every week moves by plus or minus
If
20%, it just
if I
doesn't
need
really
access to that
matter.
liquidity, there's markets where I can go sell them. Yeah, I'm going to take like a 10 or 15% loss, but if I need that liquidity, I can get access to it. And most of them I've earned 20% already, so I would be breaking even.
Yeah, it's impossible for me to lock anything like that. The
And
lock is a
to each their
problem.
own, and to each
Yeah,
their own. But
I
from
can't lock.
I'm bullish, and usually I don't either. But with Arrow, I'm way too bullish on it personally. I'm not saying go out and do this.
Hey,
This is
we've still got to do a deep dive, Mike, on those new Aero tokenomics because I mean they've got to get away from that VE33 nonsense. I think they're
they
going to.
No, they've already said that they're moving away from that model because they use that like most protocols that use it. What they use it for is to bootstrap liquidity, and they've already come out and said that they're getting away from that VE33 model.
They are. They are. So I'll be really interested to run a deep dive on the new model as soon as that goes live. It doesn't that go live in like 60 days or something? Pretty
in,
soon.
in July is
Yeah.
when they're supposed to go live. So I'm expecting this next month in June a lot of new information to come out because they've been running a lot of tests and doing a lot of things, and so I'm interested to see what they come out with. And whenever I feel like that there's enough alpha to share with the community, I mean, in our Discord, I'll always be sharing tidbits, but and then news articles I'll be sharing in the news. But for us to actually dedicate another deep dive to it, because we've done a bunch here on the channel on Aerodrome, so I just want to make sure that there's some good solid content before we dedicate a deep dive to it.
Yeah, I'll put together something for you. Don't worry. It'll be great.
I'm sure you will. You fudge
I
slinging
know. I know.
bastard.
Oh man, I call it like I see it. And I
No,
don't own
no, I appreciate it. Like I said, that's I mean, that's the way we do it here is we're going to tell you the good and the bad about whatever project. Like Ondo. I held Ondo forever, and we just I've been screaming from the rooftops. It's been pumping, and you see all these people shilling it and telling people to buy, and not so they don't miss out. I'm like, please just take one quick look at the tokenomics. XRP, same thing. There's
oh,
so many projects out there with just terrible tokenomics.
well, I mean, XRP is just
At
super.
least Arrow does buybacks and burns and locks to where they're mitigating the inflationary aspect of it.
Yeah, I mean, yeah. Ugh. So let's talk about another base project. Let's talk
Yeah,
about Keeta.
let's go into KTA. Let's start with the deep dive.
Yeah, let's talk about Keeta. So, I gotta say, this was always one of the projects whenever someone would take a look, shill this thing, whenever I would see content about this thing, I always thought it was some type of bullshit because, like I look at the token price and if it's going down only, like impossible for me to get excited about it. And now that it's had a little bit of a pump, back up to the 200-day moving average here, people are starting to get excited about it again. And I just don't understand why. But that's why we put together that deep dive research today. So before we hop into that, something that we always do is we price whatever asset we're looking at in Bitcoin terms. Because if it's not outperforming Bitcoin and it's got a higher level of volatility than Bitcoin, which, let's be honest, every other digital asset has, well, then how can you justify holding it? If it's going to underperform Bitcoin and it's got higher vol, doesn't make sense to own unless there's something that I'm missing here. That's why we put together this deep dive research. So it looks like this has something to do with institutional adoption, maybe RWAs, something or other. So let's just take a look real quick through this Keeta data. Okay, so a hybrid virtual DAG, directed acyclic graph. Isn't that
Yes,
yeah, that's the
it's the
DAG
same
guy, right?
architecture. It's the same architecture as Constellation DAG.
Got it. Okay. So remember, we're always trying to figure out how does activity on a chain, because at the end of the day, these chains are businesses and they sell block space. How does activity on a chain drive number go up for the token? Does it? Is there any connection between the activity on the chain and the token price? Because if not, well, that's a problem for token holders. So it looks like something to do with Google Cloud Spanner integration. Okay, I'm just running through this. I have no familiarity with Keeta at all, but I want to learn about the tokenomics. Okay, so it looks like they've got it's a 1 billion token fixed hard cap. They've got a lot of a lot of tokens locked still. that are, going to be unlocked and potentially, could be sold on the open market. So I would describe this as a low float project because it's only got 54% circulating, right now. Um, Programmatic continuous release. Okay, so there was the TGE. All right,
So,
got it.
so really quick, that Google aspect that you mentioned, the one of the potential reasons why they got them as a customer is their lead strategic investor. And I had to look this up because I knew that this was the case, but I forgot the guy's name. So the most prominent individual backer anchoring Keeta's capitalization is Eric Schmidt, the former CEO and chairman of Google. Schmidt publicly backed the team early on, specifically highlighting that Keeta's proprietary high throughput ledger technology was orders of magnitude more scalable and efficient than existing solutions. So I did a live stream when Keeta did a stress test, and they reached over 1 million TPS.
I mean, that sounds great. I think there's a lot of chains that are working towards TPS numbers like that.
Mhm.
I've heard rumors that Solana has some upgrade that gets it to 1 million TPS.
Mm.
Um, so sounds great.
I
Um,
just wanted to add that because, like I said, I found it interesting that the former CEO and a chairman at Google, that Eric Schmidt, he invested like tens of millions of dollars into this project. And again, I think that's probably how they got that Google Cloud integration.
Yeah, yeah. So one thing that I always keep in mind when talking about what seems like a large investment from a guy, the likes of Eric Schmidt, right? One of the wealthiest men on the planet. For him to invest 10 or 20 or $30 million into a
Isn't it?
startup is
Isn't it?
nothing. It
No,
doesn't move the needle at all. Um, but yeah, interesting to know that he's got a stake in this thing. Okay, so let's see here. I want to go ahead and play the video content rather than running through the slide deck because I really don't know anything about Keeta. Let's watch this piece of content. Let's learn a little bit here about Keeta. And Mike, let me know if you can't hear this here.
This data visualization compares the operational velocity of legacy payment networks against the Keeta network. Where traditional SWIFT and ACH networks take days and suffer from high intermediary fee drag, Keeta's testnet achieved a peak throughput of 11.2 million transactions per second with absolute finality in 400 milliseconds. To process 20
So 11.2 million TPS? That's I think the Lightning Network can do like 40 million TPS, but that's because it's like all off chain, like really lightweight messages. I haven't seen any other network that can do TPS numbers like that.
6.5 billion transactions across 30 million unique accounts at that speed, Keeta bypasses the bottlenecks of standard blockchains by using a deeply unconventional architecture. The project operates as an enterprise-grade Layer 1 engineered specifically to facilitate compliant real-world asset tokenization and handle direct institutional payment routing. This ledger is a high-velocity, borderless system capable of pushing immense data loads without a single centralized choke point. Keeta represents an architectural departure from standard blockchains, re-engineering how localized payment rails scale globally. That engineering model drove a 2023 financing round valuing the project at $75 million, led by tech veterans like former Google CEO Eric Schmidt, lending the protocol immediate institutional credibility. Yet despite the network's processing power, KTA faces extreme programmatic supply dilution. That ongoing inflation creates a persistent structural sell pressure on the secondary market.
Uh-oh.
Beyond supply metrics, KTA is attempting a massive vertical integration by outright acquiring a traditional commercial bank to control its own fiat settlement. The evaluation for institutional allocators requires balancing two forces. Does KTA's sub-second integration with traditional finance provide enough value capture to survive a 45% structural supply overhang
Right.
and intense regulatory scrutiny? Standard Layer 1 blockchains force all global transactions into a single sequential queue, severely capping their maximum throughput. This illustrates Keeta's virtual directed acyclic graph architecture. It solves the sequential bottleneck by assigning an individual, independent blockchain to every unique network account. When transactions occur between different accounts, they create virtual links across these independent chains, weaving a parallelized network state. By individualizing the chains, Keeta permanently eliminates the mempool waitline, setting a mathematical foundation for scaling that expands directly with the network's account volume.
Hmm.
To manage these simultaneous executions, the protocol relies on an optimistic concurrency control model. The network simply assumes transactions do not conflict, processing them all concurrently to maintain peak speed. This flowchart maps the delegated proof-of-stake consensus. Elected nodes observe executions and cast temporary votes for validation before committing to permanent ledger finality. Running this high-speed state machine across distributed geographies requires Keeta to underpin the sequence with a massive, centralized database backend. Keeta utilizes Google Cloud Spanner as its primary depository, executing up to 300,000 queries per second to resolve concurrency conflicts and write durable voting states. Integrating a decentralized graph structure with a centralized Web2 database allows Keeta to process real-time fiat transaction volumes. Operating the network requires the KTA token, the core economic unit for validator delegation and for covering dynamic gas fees to prevent ledger spamming attacks. Beyond gas execution, traditional financial institutions must lock KTA as baseline clearing collateral within the Anchor software development kit in order to mint tokenized equities and stablecoins. To bootstrap early liquidity, Keeta executed its token generation event by deploying KTA as an ERC20 asset on Coinbase's Layer 2 base network. These core mechanics establish deep economic utility, directly tying the tokenization of physical assets to the active on-chain demand for KTA. This line graph exposes the primary economic friction. Out of the 1 billion maximum supply, 45.7% remains locked. Instead of sudden cliff drops, team and investor allocations are governed by decentralized Sablier vesting contracts, dictating a steady upward flow of circulating supply. These programmatic streaming contracts release tokens second by second directly into target wallets, converting lumpy unlocks into a highly predictable market flow. While
Nice.
continuous streaming protects the token from sudden supply shocks, it guarantees a persistent structural sell pressure that acts as a strict ceiling on KTA's valuation for the next 3 years. By
Wow.
2026, Keeta transitioned from base network testing to directly integrating with global fiat infrastructure. Securing PCI DSS Level 1 certification, the industry's highest security standard, allowed Keeta to integrate with Visa Direct for real-time global payments and debit card linking. Simultaneously, the team deployed API hooks for Swift wires and localized ACH rails, allowing institutions to route multi-currency fiat deposits straight into their on-chain accounts. These specific integrations upgrade Keeta from an isolated ledger into a highly interoperable settlement hub, capable of bridging Web3 liquidity and traditional finance. Even with API hooks, the ultimate operational bottleneck for crypto networks remains the last mile problem, relying on expensive third-party OTC desks to execute fiat-to-crypto conversions. Keeta's radical solution is a pending agreement to outright acquire a traditional commercial bank to secure direct fiat settlement
We
channels.
already did that.
To fund the acquisition and cover integration costs, Keeta allocated 35 million KTA from strategic reserves. This introduces an immediate short-term inflation risk. Furthermore, global regulators maintain a highly cautious stance toward crypto capital controlling traditional banks, subjecting the deal to rigorous compliance reviews and the threat of years of delays. The acquisition operates as a massive structural gamble. It either secures total financial independence for the protocol or creates an insurmountable regulatory roadblock. This summary matrix visualizes the institutional decision profile. Allocators must balance Keeta's advanced technical engineering against heavy tokenomic and regulatory headwinds. The bullish thesis is clear. Keeta's architecture functionally solves the scalability trilemma by executing localized retail payments at a global scale. The bearish risks present equal weight. There is a 45% supply overhang, potential underlying Solidity compiler bugs, and intense scrutiny over the bank acquisition. KTA's consolidation range between 12 and 18 cents reflects a market heavily trapped between the reality of massive technical utility and looming supply dilution. KTA is an enterprise utility token, strictly tethered to the friction of real-world legacy systems. The first actionable indicator for allocators is the secondary market's volume, specifically its ability to absorb the relentless sublier vesting streams over the next 36 months without breaking the valuation floor. The ultimate catalyst remains whether global financial regulators will actually allow a decentralized protocol to absorb traditional banking architecture. If the bank acquisition clears and the directed acyclic graph sustains its operational load, Keeta positions itself to move beyond mere interoperability and functionally replace legacy payment rails.
That's really interesting, Mike. So this is a chain. Does that mean that I can bring it up over here on DeFi Llama and take a look at Keeta? Is this? Yeah, it is. Look at that. It's a chain. Bad gateway. Okay. DeFi Llama. Looks like I'm getting an error on DeFi Llama. Let me try this again. Okay. I'm just going to go to chains over here and let's see if we can find Keeta. There it is. And over the last month, plus 34%, not bad. The last week, plus 55%. It's saying, a very, very small DeFi TVL, but let's see if this opens up. Okay, there it is. So let's see what we've got. Alpaca DEX and Murphy the DEX. So you've got two decentralized exchanges that DeFi Llama sees that seem to be native to the Keeta chain.
Well, the alpaca that's actually on Constellation Network. Because
Yeah,
I actually ended up, if it's the same one, I actually got an airdrop for that. It's the Paca token, and yeah, not a big fan of it. But I don't feel like that this is meant to be a DeFi chain per se, as far as protocols. It seems like it's more of just to move value. It just seems more to be for Rails. But
yeah, it's probably compatible with the Constellation chain and Keeta because they both use DAG, maybe that Alpaca DEX, whatever that is.
could be,
Um, it could be, but my understanding of Keeta so far is that if we bring it on over here to the chart in Bitcoin terms, it looks like a centralized, very fast ledger. That's what it
yeah,
looks like. Uh,
I would
uh,
agree.
yeah, so if it's centralized because it looks like they run it all on Google Cloud, that would explain the Eric Schmidt investment, and it's
Mhm.
very, very fast. That explains, and they bought a bank, so it looks really interesting. But this token, like, how do you actually profit as a retail investor
So
after learning
it
a little
touches
bit?
on that in the material. So it sounded like there was some aspects to the tokenomics that was very beneficial or potentially beneficial. So I did like that there's like a slow trickle of tokens that are being unlocked as opposed to these big cliffs, where millions and millions of tokens are being unlocked and dumped at the same time. So it's a steady potential sell pressure as opposed to just these massive dumps that are going to freak people out. The other aspect, I'm trying to remember what it said about it. It was, what was it? Oh, that the amount that needs to be locked. So the different institutions and the validators and stuff like that, they have to lock Keeta to be able to be validators on the network. And what was the other one? That the gas fees. So I would be interested to find out how much does a transaction cost in Keeta.
Yeah, I think that the market is telling us that until that supply cliff it ends,
Yeah,
it looks like this one has some structural inflation problems. This recent rally. Let's just take a look at this real quick. Just do a little bit of basic technical analysis on the chart here. So if I grab my brush, this is the anchor point. Here's a lower high. And just yesterday at the 200-day moving average, we got another lower high. So here's a low. Here's a series of lower lows. Here's another lower low. So in my opinion, Keeta looks like a great short opportunity. You know, you could. It looks like you could potentially get short this one all the way down to, basically the all-time lows at 12 cents, or maybe even down to this lower part of the channel. Um, depending on what Bitcoin does over the next maybe 60 days, 2 months. But the fact that it got rejected like this at that 200-day moving average, straight up and then straight back down, complete rejection. And if we zoom in here to like a 4 hour, you'll be able to see this even more clearly. I mean, there's the 200-day moving average right where my arrow is. There's the pump and the dump. And I mean, yeah.
So Keeta's gas fees, it's 5 times more than XRP, but it's 0.00005 Keeta or dollars, excuse me. So a fraction of a cent to do a single transaction. So it would take quite some time for the gas fees. There would have to be a lot of network usage and things like that to even put a dent in the supply.
Yeah, I just wondered to myself, where would I get short this thing? So I could actually get paid 40% to get short Keeta on GMX.
Nice.
That actually sounds like an interesting trade.
No, it does.
Yeah,
So Crispy's comment here, Keeta was often called the XRP killer when people hyped it last year. I remember we did an episode on it, and I poised that, presented that potential, argument that just because of its architecture, because of just the different aspects of it. I mean, I saw it as being superior for that, and purpose built for that use case. I just saw it being a superior product to XRP.
I
you know
mean, kind of hard to be worse than XRP. You know what I
exactly.
mean? It's
Exactly.
like,
And that's why that's why I kind of presented it like that. Is why would I buy XRP when Keeta
I
looks to
mean, if
be.
you've got this big bag of dog shit, and that's XRP, and then you've
I would
got
rather I would rather have
you've got some cat shit. That's
would you rather eat dog shit, or would you rather eat dog shit with bread?
I mean,
No,
neither. How about neither?
personally, I think when it comes to this use case, I think Keeta is a very interesting project for what they are the pain point that they are seeking to address. The speed, the modularity, the scalability, all of those things I think is very interesting. The fact that it's on base network makes me more interested. The tokenomics, not optimal, but
Right.
I do see them having its upside potentially. I do agree with you, David, though, that I would be hesitant for any major upside potentially until like that 2 or 3 year mark. I think that your
Yeah,
material
you
talks
see, you
about.
see this. I'm sharing the slide deck here with
Yeah,
the supply waterfall. So
yeah,
it
yeah, yeah.
says August 2029. That's the
Okay,
finalization of the 48-month linear
so about
cliff
3 years.
or linear stream, not linear cliff. Excuse me. So, yeah, 45% of the supply is still yet to unlock, and
Mhm.
it looks like it just streams. So every second it unlocks.
Yeah,
So second by second flows. So very inflationary, it looks like. But if it's able to survive the chain until 2029, um, well, I mean, it's 2026, so we've still got literally 36 months. If it can survive for another 36 months,
Mhm.
and it gets adopted, in some form or fashion, then
I
maybe.
would. On that note, I would be interested to see how deep the Swift use case and the Visa use case goes. That's because it mentioned that in the material as well, and I remember hearing about that months and months ago. So I'd be interested to see if those were live and actually being used, or if they were just exploratory, test cases, things like that. Because you gotta separate the wheat from the chaff when it comes to a lot of these announcements and partnerships and things like that. not to be negative, but you really do, because often, they'll hype if if Brad Garlinghouse is sitting on the stage with the Fed chair. They're going to say, the XRPL is going to be used, as the one and only rails for the U.S. government, because he was sitting on a stage with the Fed chair. You
Nah, it's not going
you
to be
have
used for anything.
well, I'm just using it as an example, because
Yeah.
that's the kind of hype that you see on social media. So you got to be really careful when people put out, posts like that. I like to see things like Canton Network, where you almost hear nothing about potential partnerships or anything like that until you're getting an announcement that they launched a validator or a super validator, and they've launched a DApp or something on the network, and they're actively using it. That's the kind of thing that I pay attention to. Not rumor, not maybe, not if, not possibly, none of that stuff.
Nah, I want something validated, something real. Um, so let's see here. Why don't we switch gears, Mike, and start talking about something that's number go up. Um,
Well, one second. Crispy did mention Keeta uses profits from its two stable coins to do buybacks. I'll have to look into that.
yeah,
I like to diversify and make sure I have all kinds of shit. Yeah, I'm kind of the same way. I have a decent amount of my portfolio that are long shots, like Keeta, Plume, things like that. And then I have other stuff that I feel like are going to be big contributors to the upside of my portfolio. So I tend to agree with you, Crispy, but I'm a little more risk on than most. So all right.
I actually disagree with that, Crispy and Mike. I don't think it's a good idea to diversify. I think it's if you're really trying to make money, it's a much better idea to, you know, do all the work in the world on a bunch of different projects and then pick the very best one or two and concentrate into the best and then disregard the rest. Diversification is for, when you don't do enough work on what you hold. So yeah, I don't
Agree to
like
disagree.
diversification. Sure, yeah, works for some people. But let's take a look here at render. So render has been getting a little bit of that AI pump, as we're seeing near pump, and I think near is going to dump. That's what I think. And then we're seeing render get a little bit of that move to the upside. We're also seeing a bunch of other AI projects get a little bit of a pump over the last couple of maybe 2 weeks. Tau has bounced off of its 200-day moving average here. As we go down my list, what else? Fetch is on the list here. I think that one has gotten a little bit of a move. Aether, which is like a competitor to render in a form or fashion, some way or other. Aether's got a little bit of a move today to the upside. Where's Fetch? There it is. So Fetch getting a little bit of a move to the upside. Virtual's another one of these AI agent, AI plays. A little bit of a move to the upside out of Virtuals. So, I think what's going on here is because Near has, basically like more than doubled. It's up almost 3x from trough to peak just over the last couple of months. That's, we've got a little bit of a bid into these AI tokens now. And Render is one of the larger AI tokens. I just don't know. Again, we're always thinking about tokenomics here. You know, does it if Render is generating revenue, if Render is a successful business, how does that translate into value accrual for a token holder? Like if you're holding the Render token and the Render business makes a bunch of money, does that matter to you? Like, does the price of your coin go up if that underlying protocol or business makes money? If not, then what are you holding? You know? So that's always what I'm thinking about. Tokenomics, tokenomics, tokenomics. So in that vein, let's go ahead and take a look here at Render Network. And I want to just go ahead and play the video content. And then after we do that, we can go ahead and just run through the slide deck. So Mike, let me know if you can't hear this one.
All right.
Welcome to This Explainer. If you've been tracking the DePIN space, that's decentralized physical infrastructure, you already know Render is an absolute heavy hitter. Today, we're unpacking its massive 2026 evolution, specifically tracking its hard pivot from traditional 3D rendering to the booming world of AI. We're going to look past the noise and focus strictly on the data, the network architecture, and the on-chain economics to figure out what's really driving its billion-dollar valuation. Let's get right into it. Okay, let's take a quick look at where we're headed today. We'll start with the decentralized GPU marketplace, then dive into the burn and mint tokenomics, followed by a valuation reality check, their expanding AI compute subnets, and finally wrap up with the net deflationary goal. All right, part one, a decentralized GPU marketplace. We really need to establish what Render is today, and more importantly, why they made the huge leap to migrate their entire architecture over to the Solana blockchain. The shift in compute requirements explains exactly why Render had to pivot. Historically, Render was the go-to decentralized engine for high-end, studio-grade 3D visual effects. But traditional 3D graphics, they rely on sequential, single-node processing of really dense, massive files. Generative AI and large language models, on the other hand, are a totally different beast. They demand massively parallelized, low latency clusters that all run simultaneously. The core computer requirements are just fundamentally different. So, Render actually had to completely overhaul its containerized environments to capture all this high growth AI demand without abandoning its core creators. And to actually orchestrate thousands of these rapid fire microtransactions for parallelized AI, they migrated to Solana. It makes total sense when you look at the specs. Solana gives them sub-second block times. We're talking around 400 milliseconds, and transactions cost fractions of a cent. But the real game changer is Solana's ZK compression. It literally cuts Render's on-chain state storage costs for active accounts by over 90%. You just can't build a high-frequency, decentralized AI compute mesh without those kinds of margins. Moving right along to part two, burn and mint tokenomics. Let's see how this migration powers the protocol's redesigned economic engine, which they call the burn and mint equilibrium framework. The crucial thing to understand here is this closed loop process. Under the BME model, an enterprise client doesn't even need to hold crypto. They can just pay in standard fiat USD. Then, an on-chain oracle swoops in and converts that fiat into render tokens at the current spot price. Now get this, 95% of that render is permanently burned from circulation, gone forever. The other 5% goes to the foundation. Meanwhile, completely decoupled from that whole burn process, new tokens are minted on a set, independent schedule to reward the node operators who are actually doing the heavy computing work. The true genius of all this really boils down to one elegantly simple mathematical formula. The change in the net circulating supply equals the volume of minted tokens minus the volume of burned tokens, right? So for this token to actually become scarce and valuable over time, the burn, driven by real-world network usage, has to eventually outpace the programmatic minting that goes to the node operators. And we're actually seeing some incredible traction there. In 2025, actual network utilization drove a whopping 158% year-over-year increase in token burns. That permanently removed about 692,000 render from circulation. This is huge because it signals that real structural deflationary pressure is starting to build up as their compute clients scale.
Yeah, but what it's not saying there is, is the token still super inflationary or not? It's all it said right there was compared to last year, it is burning 158% more tokens. But that doesn't matter if it's still super inflationary. Well, I
Yeah.
think we're going to learn about that later on in the video here.
Good, good.
Okay, part three, the valuation reality check. Because here's where we hit a really fascinating paradox. We need to look past all this impressive tech and face the actual numbers. With a circulating market capitalization hovering right around $1 billion in 2026, we have to step back and ask objectively, is a render trading on raw financial reality, or is it just riding speculative narrative hype? Honestly, this is the fundamental question for anyone analyzing the DePIN space right now. When you dig into the data, it reveals an astronomical implied price to sales ratio exceeding 325x.
Okay, this is enough to just stop and pause here for a second.
Yeah.
325x price to sales. So you've got to think of Render as a business. This is a business. and they sell decentralized GPU compute. If they're doing that at a 325x price to sales ratio, that is like, you could compare that to like pets.com or something. Like it's kind of ridiculous.
Yeah.
So, yeah, this is what exactly are you paying that premium for? Because they've got competition. Like they're not the only
Oh
ones.
yeah, DePIN. There's plenty of people that have thrown their hat in the DePIN. Decentralized physical infrastructure. Compute. Decentralized compute.
Exactly. And so if I'm seeing, the render the token, push to the upside a little bit here, it's up from $1.80 to $2.30, rallying along with a bunch of other AI tokens right now. But if I know that this thing is probably still super inflationary, it hasn't really found product market fit, and it's trading at a 325x price to sales ratio, like it's just really, really difficult for me to get involved with something like this.
Well,
Um,
that's an important. Well, I want to, really quick. I want to touch on that because it's a really important. Not just tokenomics. It's a really important aspect of these projects that people understand that the valuation. So a lot of these prices and a lot of these market caps on a lot of these crypto projects, I feel, and from a business standpoint, is I'm standing on pretty solid ground. The valuations on some of these are ridiculous.
right.
Tens of billions of dollar market caps or valuations for projects that do nothing, for tokens that have no connection, even if the underlying company is doing amazing things. If the tokenomics are shit to where the token isn't even connected to the profitability of the company or the revenue generated or the fees, then there's the token should not be worth that much. There is some really, really some major potential downside on a lot of these vaporware projects and poor tokenomics projects and hugely overvaluated
So,
projects.
so yeah, if we're talking about something like render, trading at a 325x price to sales ratio, like uh, maybe the business, like the render protocol, it might be useful. Like you
Absolutely.
could
And can that
use.
change? And can that change? Absolutely.
Yeah, so it might be useful, but if you're gonna buy the render token with some expectation of making a profit on the thing and being able to see a return, like in the immediate term, like over the next 12 months, well, why would you pay such a steep premium? Like this is a business at the end of the day. So that's why we spend so much time, digging into these tokenomics here. Mike, we've got 5 minutes left in this deep dive, and then I want to see if we can get into some of the hyperliquid stuff. I really want to. I hope we have enough time. We might run out of time. Let's see if we can get through the render stuff here.
Put that into perspective, the broader DePIN industry standard usually sits somewhere between 10 and 25x. So Render is trading at a massive venture capital level premium. The market is heavily, heavily discounting future global GPU demand into today's price. That billion-dollar premium exists because the protocol's actual on-chain realized revenue for 2025 was roughly $2.7 million. Now, $2.7 million is absolutely real money, but stacked up against $1 billion market cap, it means Render is currently trading as a macro leveraged proxy for the global AI boom, rather than acting like a mature cash flow positive business just yet. When you zoom out and look at the broader landscape of decentralized compute networks, Render definitely stands out. With over 5,600 nodes spanning everything from everyday consumer RTX cards to serious enterprise hardware, its unique BME mechanism is vastly different from Akash's provider staking or BitTensor's intelligent subnets. But the big takeaway here is that Render faces intense competition, and I'm not just talking about IO.net. They are facing massive pricing pressure from centralized hyperscalers like AWS and Google Cloud, who still absolutely monopolize the top-tier enterprise chips. Which brings us to part 4, expanding AI compute subnets. To bridge that massive gap between its billion-dollar valuation and its current revenue reality, Render went ahead and executed some seriously aggressive structural expansions in 2026. First up is the dispersed subnet. Think of this as a purpose-built AI infrastructure mesh. By using multi-node clustering, it actually slashes round-trip latency by 80%, which is absolutely vital for real-time AI inference. It runs over 600 open-weight models natively. But the kicker? It costs just 69 cents per GPU hour. That undercuts the centralized cloud guys by up to 30 times. It is an incredibly aggressive play for AI market share. Second, and honestly perhaps more crucial for sheer scale, governance proposal RNP-23 successfully integrated the Salad network. Guys, this is massive. It literally plugs the world's largest pool of consumer GPUs. We're talking over 60,000 daily active machines spread across 180 countries directly into Render's Solana settlement layer. And that leads us per net deflationary goal. Let's examine how this Salad integration is practically designed to solve the protocol's systemic inflation problem and help it reach its ultimate objective. Breaking down the revenue split for the Salad container engine integration shows exactly where the money flows. Unlike a lot of traditional partnerships, Salad didn't just spin up a new token. They're actually using Render. A massive 60% of gross revenue is routed on-chain to be permanently burned. 35% goes to the Salad node operator, and 5% goes back to the Render Foundation. This heavy 60% burn is engineered specifically to force scarcity. Through some scenario testing of a hypothetical $1,000 customer spend, we really see the genius of this setup. Thanks to a mandatory 4% excess burn mechanism that's hard-coded into the proposal, the protocol maintains a net deflationary margin no matter what the token price does. Even in a worst-case scenario where the Render token price depreciates to, say, $1.90, the network still burns more tokens than it emits. It builds in this amazing structural stability that's totally insulated from crypto market volatility. Of course, to ensure the network doesn't completely buckle under the weight of these new subnets and massive transaction volumes, the reason Solana Firedancer upgrades scaled capacity to an unbelievable 10,000 transactions per second. That kind of absolute finality and speed is exactly what secures Render's critical partnerships with heavy hitters like Stability AI, Luma Labs, and OTY. It proves their hybrid rendering pipeline can actually perform at a global scale. Ultimately, all of this crazy architecture and engineering points back to one single inescapable reality: transitioning its burn and mint equilibrium model from a structurally inflationary state into a sustainable net deflationary state. It's basically a high-stakes race between adoption and inflation. Success completely relies on scaling real-world enterprise transaction volumes up until those token burns consistently outstrip network emissions. So I'll leave you with this to chew on. With its impressive multi-subnet architecture now fully in place and a direct line to 60,000 new GPUs, can Render close the staggering gap between its billion-dollar hype and its real-world revenue fast enough to dominate the future of decentralized AI compute? Thanks so much for joining me for this explainer. I hope this helped unpack the complexities driving Render's 2026 landscape.
That's really interesting. Now, Render was kind of a big deal, last bull cycle.
Yes.
It had, at the beginning of last bull, it really performed quite well.
Yeah.
It was one of the first AI coins, along with Fetch and a couple of others that really started to run. Ran all the way up to $13. I remember holding it at $13. Actually, thank goodness I exited the thing. But yeah, down here at $2.34, if I just do some basic technical analysis on this. So number one, the fact that it's trading above that 200-day moving average, that's positive. That's very positive. The fact that and if I go ahead and change the color of this to just white so we can see it a bit more clearly, this level of resistance, it's broken out above and trading above. So this trend line resistance, the fact that it's above it, positive. The fact that it's above that 200-day moving average, positive. Those are good things for Render here. But yeah, that's against a backdrop of a Bitcoin bear market that we are still in. So what that tells me is any pump that you see out of altcoins, unless you're talking about like Hype or Tron, or Canton, not yet, because Canton is still inflationary. But unless you're talking about Hype or Tron, it's really, really difficult for me to get on board just because, during a Bitcoin bear, unless the token is outperforming Bitcoin, like I can't get excited about it until the end of the bear. Then I can get excited about altcoins because I think you'll have an opportunity to buy them, at the bear market trough or at least near it. If we take a look at render in Bitcoin terms, this is render BTC. The fact that it's trading above that 200-day moving average, that's positive. That's definitely positive. Um, but it's done nothing but underperform. It had that pump, the start of the bull, and then just spent the entirety of the last,
Yeah,
two and a
all
half years,
plus.
yeah, just moving in the opposite direction. So, um, yeah, I'm not sold on render, not yet. But if maybe that price to sales ratio comes down, and maybe the token price itself goes maybe down to those all-time lows at 30 cents.
I would
That's
I would be
maybe.
interested to see if one of these DePIN projects, this decentralized compute. I would be interested in. I don't know why they haven't launched on something like Keeta. Something that has more throughput, more TPS. Because I mean, if you're trying to do AI, and decentralized compute, I mean, you want to have a faster network. So I'd be interested to see if if there's some potential for some of these to move to that DAG model.
I mean, maybe, but it seemed to me like Kita was actually pretty centralized. So, if they're running a lot of their compute through Google Cloud, then um, you know,
I mean,
kind
as
of,
of right now, yeah. I mean, it's
yeah,
just like I said, it's just the the speed. Is what I was thinking of. Because if you're if people are trying to, because render, the big thing, that the news that I remember from the last bull cycle was, I want to say, it was like Hollywood, and a lot of the the graphics rendering is what it was focusing on. So basically all the kind of AI generated special effects and things like that is what was being hyped last bull cycle. To be honest, I don't know how that adoption is going now. But that was the big hype at the time.
yeah, it was, and I think that there was also some hype about a partnership with Apple
I remember
because
that. Yep.
yeah, yeah, there was, I think, an Apple product launch where Render was shown, or the
Oh,
parent
yeah.
company of Render, I think it's called Octagon or something, was shown during an Apple product launch, and there was some speculation that maybe Render was going to be used by Apple in some way. I don't think any of that ever panned out. Um, but taking a look at Render, to me, it looks like this pump is sellable. And then compare it to the other AI alts that pumped around the same time at last bull. So here's Fetch. I gotta say, this pump here out of Fetch. So Mike, if you were looking for an LP opportunity, if you wanted to provide liquidity in this thing, um, because the volumes were so ridiculously high during this pump, you could
Mhm.
actually just set like a 100% wide range on
Yeah.
this and actually make money compared to holding, because the volumes were like 3% per day for like 6 weeks, like
Yeah.
every day. It was crazy. Um, so yeah, this pump out of Fetch was, made a lot of people a lot of money, but then it just gave it all back. And now
Yeah.
we're trading down here at 25 cents. And remember all the hype around Fetch? It was,
Mhm.
they were going to merge with to create ASI.
Yeah.
And, did that ever happen? Maybe.
So,
But
I got the details of Apple and Render, if you're interested.
yeah, yeah, yeah.
So there is no deep connection between Apple and Render, but the deep connection between them exists via a native software pipeline integration through OTOY. the parent company behind Render. Because OTOY's CEO Jules Urbach also founded Render, the two architectures are fundamentally linked. The core mechanics of how Render is integrated into Apple's ecosystem break down across several areas. So the backbone of this relationship is Octane X.
Octane, that's right. Yeah.
Yeah,
Yeah.
OTOY's industry standard 3D rendering engine. The architecture, Apple worked directly with OTOY to completely rebuild Octane X from the ground up to run natively on Apple's Metal Graphics API and Apple Silicon, and their M series chips. The key event feature. Apple was predominantly featured Octane X during multiple major keynote events, including iPad Pro launches and WWDC. During presentations, Apple explicitly highlighted that heavy 3D rendering apps like Octane X flat out fly, quote unquote, on high end Apple silicon. The render logo connection. During these official Apple keynote video streams, sharp eyed viewers frequently spot the official Render network logo embedded directly into the presentation visuals during the Octane show.
Yeah, that was a big deal when it
Yeah.
happened. Yeah.
So that's the connection.
Yeah. So, I mean, great. Look, I would love for one of these or many of these protocols to succeed.
Oh,
Um,
absolutely.
but so okay, not really a legit partnership with Apple, I would say. But if we're taking a look at these, you got virtuals, you got Fetch, you got Aether. This
Aether
one
was
looks
another
really
big DePIN, hopeful last bear market or bull market.
bull. Yeah, yeah, yeah. And then you got, we were just taking a look at Render. You got Akash in there. Akash has had, a nice move to the upside over the last couple of weeks here, going from 33 cents to 88 cents. Not a bad move there. And then of course you've got BitTensor Tau. This is, one of the most interesting projects in my opinion. And then you've got Render, a nice move to the upside recently, and of course Near. So Near, pushing up towards a level of resistance up here at $3.30. So those are just like a smattering of like larger cap AI names. But yeah, I'm not convinced that we found true product market fit yet. Even some of those BitTensor Tau subnets like Shoots, I want to find out if it's actually cheaper to use Shoots than to use AWS, let's say. Maybe it is. I'm not entirely certain. So let's see here. I do have some information on Hyperliquid, Mike. I want to see if in the last 7 minutes we can go through the slide deck here. Because with Hype just, ripping, it's $61.60 right now. With Hype, really, really performing well, a lot of people have been comparing it to BNB. And BNB, when it was at 30, 40 bucks, ended up ripping to like $500, like over the course of like 3 months. So I don't, of course, I don't have a crystal ball. I don't know if Hype is going to do something similar, but what I will say is that when BNB
Hype pulled back like 1%. I'm in. I'm kidding.
it's just the thing is though, is that when BNB put in that 10x, it did it like during the peak of the bull in 2020, 2021. So we're not exactly in like peak bull right now, but Hyperliquid makes a ton of money. And
their tokenomics are amazing.
Right. And so that's super important. Super important.
So important.
Yeah. So, it's saying here 70% of DeFi perp open interest is on Hyperliquid. So you talk about market dominance. That is it right there. Revenue capture, 42% of all public blockchain fee revenue. Like almost half is just Hyperliquid. Amazing. The protocol scale, $9 billion. And as of just a couple of minutes ago today, it was at 64.20, so just about at a new all-time high. And then you've got so the hypercore and the hyper EVM. Now, I gotta say, if you're running your setup using a hardware wallet, using the hyper EVM chain can be kind of a pain, simply because there are like within Rabby and Ledger and Trezor, sometimes it doesn't quite read hyper EVM messages as well as it would read, a chain like Base, let's say. So, and I think that we're going to see growth on the hyper EVM chain, though, simply because it's a part of Hypercore, but or it part of the Hyperliquid, I guess you would say, ecosystem. So it's got the same. I think they share the same consensus engine, but getting onto and off of Hyper EVM can sometimes be a bit of a pain, especially if you're running your setup with a hardware wallet. So just something to keep in mind there. HIP3. So this is, the more TradFi stuff, RWAs, look, there's some really, really big open interest for like S&P 500 contracts over on Hyperliquid. Same thing for gold and silver, or even, like Google, Apple, stocks like that. So a lot of cool stuff that you can trade. And then we've got HIP4. So let's see here. What is HIP4? What is this? Isolated margin mechanics. So those are the outcome. Okay, so these are this is like the poly market type contract. So HIP4 outcome contracts eliminate continuous funding rates using fully collateralized binary isolated margin. Okay, so these are not binary options. These are isolated margin contracts. Interesting. Okay. Hyperfi composability. Oh, that's right. So I think Brahma, they had a card that you could use called Swipe. And I think that got purchased. I think Brahma got purchased by Polymarket. And so that Swipe card ended up getting integrated into Hyperfi. So they've got that credit card spend against your collateral on Hyperfi, which is pretty cool, because it's built on top of the Euler stack. And I really like Euler because it's permissionless, completely permissionless. So that's part of the Hyper EVM chain. Looks like you got this flywheel. Whenever I see a flywheel, that can sometimes be a problem, but let's take a look at this. So definitely we have high trading volume. There's a lot of fee capture. That leads to a lot of programmatic token buybacks. It's saying, a little bit more than $1 million a day just buying back the hype token on the open market. So, but if there's a macro drawdown, then this loop works in reverse. So just keep that in mind. Flywheels can work in the opposite direction too.
Oh, that's the issue that you had with Aerodrome, and that VE33 model. It's just those flywheels. It's like, yeah, they're great when they're working in your favor, but as with anything, it can work against you as well.
Yeah, you just got to keep that in mind. And looks like they're generating a ton of revenue. It looks like half of all on-chain DeFi revenue just is generated by one protocol, Hyperliquid. Look at that annualized run rate, man. They're going to be buying back a lot of tokens here, a lot. And, that's the type of thing that pushes price up. When you see, massive buybacks and burns, and you see a breakout like this above the top of this channel and to fresh all-time highs. If
I cannot bring myself to buy all-time highs. I just can't do it.
So it's hard for me to buy all-time highs during a Bitcoin bear market.
Yeah.
But at the same time, though, if there's any type of pullback, like this one is definitely at the top of my shopping list.
Oh, absolutely. No,
yeah.
I literally have a couple $1,000s that I'm sitting on specifically to buy hype on any sizable pullback.
But at the same time, though, when I look at hype breaking out like this, it reminds me of BNB in 2020.
And that's I 100% see where you're coming from. It's just I don't know. I could miss out on hype.
I mean, doesn't the pattern look identical? Like if we just
Can you
throw
overlay?
down, yeah, yeah, yeah. So here, let me just throw down the channel. So you've got kind of sort of. I'm trying to get this channel in here, but I'm kind of botching it there.
Yeah, I
So
see what you're looking at. I just want to make sure that the audience sees it.
yeah, so let's say that you've got this channel, right? And then B&B back in 2021, after it broke out above the top of this channel, then it proceeded to go from $50 to I think 500 over the course of a couple of months there. So yeah, it basically took like 3 months, 2 months to go from 50 to 500.
Yeah,
And that type of breakout, like I kind of see, Hyperliquid potentially doing something similar. The only problem is, back in 2021, that was like peak bull euphoria.
that's the thing is that's what's given me pause is that we're not in the same place. The market, the sentiment isn't in the same place to prime for that. Not to say that it can't happen, but just I just do not see hype by itself breaking out like that. I think the overall market would need to break out like that.
I kind of agree. So, yeah, I think, Mike, we've run out of time.
I do want to end with this that we might need to take a look into. So there's a project out there called Mesh. So Mesh and Base here. Let me share it real quick, and then we'll end the show. But I ran across this. So Mesh and Base announced expanded integration into to advanced stablecoin payments and on-chain commerce at scale. So Mesh, the leading crypto payments network, today announced its expanded integration with Base, the secure, low-cost, builder-friendly Ethereum Layer 2 designed to help bring 1 billion users and 1 million developers on-chain with an ecosystem of on-chain applications. Building on years of existing support between the two platforms, the integration gives enterprises a direct path to scalable stablecoin payments and on-chain commerce with one of the most active L2s. You start pairing this with things like X402, for AI agents, that allow them to make payments and navigate paywalls and things like that. I think we might need to do a deep dive on this. We're out of time, so I don't want to keep droning on about it. But I definitely want to take a look at this. They have a mesh wallet for AI agent transactions, so that plays into the X402 aspect of base network as well. You see the new Aerodrome platform, that kind of hub of liquidity that they're building out, the multi-chain, the new platform in July. You have Morpho that their TVL has been growing, those institutional vaults, those institutionally curated vaults. There's a lot of really cool things going on the base network, and for me personally, that's where my focus is. For this kind of future of finance, and I see base network and a lot of these protocols being a key pivotal point in all of that. So
I tend
any
to
close.
agree. I think there's definitely going to be a base season, at some point during this next bull cycle here. But just as we wrap up, I want to thank everyone for joining the show live. We've got a lot of viewers on the call today, and really appreciate everyone for joining live. If you find value in what it is that we do here, please like, share, subscribe. Check out the Node.pro. Just launched a new store today. Really cool stuff there. We don't, take a dollar from any project or protocol, so we can be objective, and we can call a spade a spade. We don't take any money from any project, any protocol, period. If you want to support us, buy a shirt, buy a hat, or, hop on the premium live calls.
Or just hit the like and share and follow. If I know that a lot of you out there are struggling, we're all struggling crypto investors. Even if you can't afford to buy something or pay for something, it's something as simple as hitting the like button. It helps so much. And I want to, on the way out, I want to share this. We just launched. After this show, we're gonna. This is going to be going live. So the Node 24/7 music. David has been working hard on building this out to where if you just want some music playing in the background, while you're vibe coding or you're working on something, that's why we launched this. So anyway, appreciate you all. David, you took the words out of my mouth. Thank you. Please like, follow, share, and until next time, Veteran Crypto out.
Peace.